Hi, I'm Kevin Flanagan, Head of Fixed Income Strategy at Wisdom Tree.
And I'm Jeff Weniger, Head of Equity Strategy. And this is Minds on the Markets, where we go behind the scenes and beyond the trends to explore the forces impacting our markets.
Hey everybody, welcome back. Man, the geopolitical headlines just keep coming at us on a regular basis. You know, whether it's here with tariffs, the big beautiful bill, what's going on in the Middle East. And, you know, we're coming with you this time around, right after Operation Midnight Hammer. Interesting, for a lot of the markets, these developments we're seeing, at least in the Middle East, they kind of have been taking it in stride. But there is one market, Jeff, where we are seeing some more visible reactions and obviously a lot of commentary about it, and that's foreign exchange and what's going on with the dollar.
Mm-hmm. Yeah, absolutely. And Kevin, if you think about where we are sentiment-wise in the dollar, it's been, I don't know, is it fair to say that the amount that this has been turned on its head in the last 6 months in terms of around November, December with the Trump election, it seemed like everybody was a dollar bull. Now you have major lopsidedness. There's almost this universal consensus on dollar bearishness. The contrarians among you who are liking and subscribing and who are watching us, I suppose, you could use some of these as a major signal to get long dollar-denominated assets. I mean, Kevin, it's pretty bold. The end of dollar hegemony and all this stuff that we're hearing, that we're fielding from advisors. The B of A Merrill Lynch Fund Manager Survey just came out a few days ago. And Kevin, when they asked, how overweight are you the dollar in your client portfolios? It was at the lowest level since January of 2005. So a 20-year low. Everybody's bearish dollar. Time to get bullish on the dollar.
Yeah, I mean, it's interesting. I mean, in this era of social media that we live in, right? I mean, you're just being pounded 24/7 with headlines and thoughts, right? And people's thoughts, opinions, editorials on a regular basis. So, we've talked about just trying to filter out the noise, sit back a little bit. I know from my vantage point, right, being the bond guy, having to do it with respect to the U.S. Treasury market. But, when we're looking at the dollar, I mean, we love to use the word Tina. What's the alternative out there eventually, right?
Yeah, okay, so you made the Tina reference. That is, there is no alternative to buying stocks in a low-yielding world. And one of the things that has become a reality is you do have mid-4 percentage point yield on 10-year T-notes. But for the dollar, Kevin, that's a calm bond market. Every time you wake up, it's moving 5 basis points one way or the other. The bond market, the death of treasuries, we're going to have all these failed auctions and all this stuff that we keep hearing about. Somebody's going to replace the dollar. I'm still waiting for a nice cogent answer on these matters. I mean, the only thing that's really been working is gold. I mean, that's a notable asterisk there. Gold's been performing famously of late, but the reality is that in the last several weeks, a lot of the dollar weakness that we were seeing in the first quarter and into the second quarter kind of stopped. And you have, like I said, the B of A Fund Manager surveys at a 20-year extreme, commitment of traders report from the CFTC. How long are you the yen? How short are you the yen? That is not right now, but it was at an all-time record a few weeks ago, where everybody was suddenly bullish the yen. Well, that's a big difference from 6 months ago. You have, for example, the ZEW survey, the sentiment survey over in Germany. The ZEW is what we sometimes call that one. That was another one at a multi-year extreme, everybody loving the euro. At some point, you need to look at some of these markets and say, well, maybe I'll be the only dollar bull. And historically, when you go, and this is what we wrote about in Minds in the Markets this week, historically, when you see some of these extremes and you decide to be the only one in town who's long the unwanted currency, it often plays out nicely for you.
We only have like about 30 seconds or so to go, so I'll make this quick. You made the reference to Japan, and obviously some of the changes there, multiple rate hikes, they've been dialed back. The Ministry of Finance dialing back their issuance of long-term debt. Back to my point before, Jeff, things are moving very quickly, right?
And that was the thing we were talking about maybe 30 days or so, with whether or not the sell in May and go away concept was going to come on account of JGBs, Japanese government bonds, which were selling off so hard. And if you're watching these videos, if you're going through the YouTube archives because you're a subscriber, you can go find that. I mean, I was worried. I was worried about stocks, Japanese stocks, U.S. stocks at the time, but a lot of that sell-off has pretty much stopped. We're kind of in this status quo. So on net, it is bullish for these assets. But overseas, you got to be thinking about hedging back to the dollar, because you would be the only dollar bull in so doing. And sometimes being the only one who likes something is a good place to be in these markets.
So to Jeff's point, we're going to wrap it up here. I mean, if you're watching, subscribing to us, tell your friends, tell your families, shout it out to your neighbors. And I'm going to leave it with what Jeff loves me to do, a Seinfeld reference. Let's all sit back and just go, serenity now.
Serenity. Okay, I love it. I love it. For the old timers like us, I know exactly that one, Costanza's father. All right, Kev, good call.
Take care, everybody.